Good morning, everybody. Welcome to the Flow Show. It is now Wednesday, the 29th of October. We're halfway through the week. Lots of stuff going on. Two central banks today, the Bank of Canada and the FOMC, and everything going over in Asia with this summit and whatnot. So lots to look forward to on that. Before we get started, just want to bring your attention once more to our sale on the trader funding program. Use code spooky30 to get 30% off all plans. That's all plans, instant funding and assessment plans as well. So take advantage of that. Runs for a few more days and then it is gone in a puff of smoke. Morning, Kay. How you doing?
Morning, Ryan. Morning, everybody. Yeah, doing all right, mate. Doing all right. Eagerly waiting a lot of central bank meetings that may not give too much.
Yeah.
But yeah, I mean, everybody's now waiting for that G Trump meeting, cup of tea, and see what comes out of it.
Yeah, absolutely. We'll talk about those meetings shortly. Right, let's get through all the news and whatnot first. China might be smoothing the passage of these talks. Apparently, they are bought their first US soybean cargoes in months. They've potentially bought three cargoes of soybeans. So that, as I say, looks like they might be doing a bit of smoothing ahead of that meeting. This meeting is going to be happening tomorrow in South Korea, mid-morning local time. Don't ask me what time that is. And they're set to speak together for 3 to 4 hours. We'll see what happens with that, but that's the rough time. So mid-morning, I don't even know what time it is in South Korea at the moment, but it's going to be wee hours of the night, likely for us here in the UK. Over at the Bank of Japan, Nikkei reporting that the BOJ likely to keep interest rates on hold at the upcoming meeting this week. But apparently a final decision is going to be made on when they will hike after assessing whether the yen will weaken significantly in the FX market, which is a bit of a strange comment on that, because I don't know if it means weakening after they hike or before they hike. But it's a bit of a strange comment that they'll just wait for the currency. Kay, what do you think is behind that call?
We've seen the yen gradually weaken right into well, since Takaichi got it, but even before. Um, I've said something along those lines, like a good while ago. If the yen weakens enough, it could give the Bank of Japan an incentive to hike. It may mean that in the upcoming statement, they usually put like some sort of line, or at least Ueda hints at it during his press conference. Not specific levels or whatever, but that they always keep an eye on it. So, yeah, could mean that he uses that to signal a hike on the next meeting. Could be, yeah.
Yeah, possibly. I've been keeping half an eye on their trade weighted index that they look at. That's not doing much, 77.28. It was as of this morning. So last time when they were intervening, at least when they were saying that the yen was weak and speculation and all that sort of stuff, we were well above the 80s. So that's not showing any signs of any wholesale weakness in the yen, despite what we seeing in some pairs. But yeah, who knows? Who knows what they may decide to do with that and the reasons why we're in that window. I've seen other people calling for a January hike. Some people calling for a December hike. We're in the window. They will hike when they decide to hike. I think the real key will be those real wages. If we get start to see a couple of months of that turning positive and looking like it's staying positive, I think that'll be the icing on the cake for them. But we shall see. All speculation until we find out. At least we'll get some idea this week. Do you think they might, if they don't hike this one, do you think they might give us a hint that they're ready to go in the coming months, Kay?
I think they leave the door open. Yeah, and especially As we've already been mentioning that if they get some positive real wages, but it's been strange that those real wages have not yet really taken off. Yeah, but I think the door is wide open for December, and UADA will likely tell it. Um, yeah, well, yeah, that's the only thing I can say about it. Seems that Besant also was pressing them to, well, at least pressing Takeichi or the other government members to let the Bank of Japan do their thing, read hike rates to fight inflation, right?
Yeah, yeah. But, I think the other thing to look for will be the votes in the BOJ.
Mm,
Could be a bit of a BO Bank of England type situation where if do we get anyone else hopping across the line? We know there's two likely to vote for hikes. Could they be joined by any more? And that'd be another indication they're getting closer. But yeah, we'll see what comes from that meeting. Someone who's not going to be moving on rates anytime soon looks to be the RBA. We had their inflation data out overnight, and the main number, which is the trimmed mean, this is the one that Bullock, funny enough, tipped. It looks like a tip now. She said that a 1% number would not be very welcome. That's exactly what they got. They forecast 0.6% for this quarter. So it's well above that. Pretty much all the inflation measures coming in hot there. So RBA cut hopes have been marked down significantly, and looks like they could be on hold for a while. Big, well, fairly decent move in the Aussie on the back of that. Kay, did she tip the number, or was that just a coincidence?
um, it just shows us that she's not ready to shed her hawk wings yet, I guess. Yeah, I mean, the what was left of possible hints or not hints, but speculation about, I think there was about 10 BPs or so of a potential rate cut priced in, and that got completely thrown out of the window. Yeah, Aussie is one of those currencies that is holding pretty well, I would say. If you look at the rest of the dollars, they're not really making too much headway, but Aussie is yeah, clearly underpinned by this hawkish picture, right? Um, has to be said though, and you're right to stay on there. I have that line a little lower than the 66.36, but if you look at 66 and a quarter, 66.30, and then you even scroll back left, apart from that spike, it has shown up all the time. And again today, it did not manage to get above there. This is really the door to I think 67. If at some point this Aussie breaks above that 2025 or 30, it's I think we're off to the races. But for now, it's still capped. It capped a lot of the latest rallies, so we have to respect that level for sure. I was long and I took mine off just because we were getting so close to the level this morning, and yeah, but I won't refrain of re-entering if that breaks.
Yeah, yeah, nicely done on that one. I noticed that Aussie Kiwi is getting back up towards these highs again. So that we could be on for another potential move up, a big shift up. There's a big old level sitting up there.
Yeah,
That fib is
yeah.
a bit of a monster up here. We've had quite a few moves. 2015, we had that move. 2022, it is a definite bit of a level up here. So keep your eyes on that one.
Could be around there if we get back up to 66 and a quarter as well. The both could be together, could be going together.
Yeah, yeah. So yeah, we could be on for a big old break if that goes. But we'll wait and see what happens. Obviously, the RBNZ in the mix as well. Right, anyway, back to the data. We had the first Q3 numbers coming through from Europe. Over there in Sweden, they posted some half decent numbers, 1.1% on the quarter, 2.4 year on year. Spain coming in just around about as expected year on year, a little softer, which is a bit of a surprise because Spain's been doing pretty well of late, so I thought they might come up with some decent numbers. We had some numbers out of the UK as well, mortgage and lending data. A decent jump for mortgage approval, 65.94 thousand, beating the 64 expected. Mortgage lending took a bit of a jump, 5.5 billion from 4.3 billion prior. This is September data. I can't recall if there's anything in particular behind that jump. It could be people just coming back from the summer holidays, seeing a bit of a boost. This is one area we're going to need to keep an eye on as we get closer to the budget, after the budget, depending on what taxes and schemes the bird from accounts dreams up, because we could see the housing market getting negatively affected after that. Bank of England consumer credit data had a print of 1.5 billion. That's that one there. Credit card use, i.e. the old plastic, was unchanged at 700 million. So there's nothing untoward still happening there. Again, that's somewhere you'll see some pressures building if people are turning to the plastic to pay for everyday things. But for a while, it hasn't shown any yellow flags at all. Budgetary problems in Europe continue. We know France in a mess, Spain's in a mess, von der Leyen's in a mess as well. There's a 4-party letter been gone in saying that she needs to change the budget or they will reject it. These four parties make up the majority of votes in Parliament, so it's a bit of a big deal. So same old bum fight happening in Europe. They're having problems getting budgets passed, which could be a bit of an issue. Coming back to the UK and the Bank of England, a poll from Reuters say that 63 economists expect them to keep rates unchanged next week, and will hold the bank rate this quarter. Say 63, 29 expect one cut this quarter. Goldies, they've changed their call though. They expect a cut next week. They were previously forecasting them to keep the rate unchanged, and they expect further quarterly cuts until a terminal rate of 3% in July 2026. The pound is well under the cosh again today. I don't know if that's Goldies triggering that, but yeah, certainly the mood in the quid is not very good at the moment. Coming on to some data that we got yesterday out of the US, we got house price data from the FHFA and Case-Shiller. House prices still holding up pretty well. On the month, the FHFA up 0.4%. Year on year came in, well, you could say came in a little softer, but there was an upward revision to last month. The Case-Shiller national number came in, I don't know if it's in this calendar, came in at 1.51% from a prior 1.68%. So a little bit softer there. These numbers have been moving down a bit, up in the 3-4% year or two ago. So they are coming lower, but still positive numbers. This is though August data, so a bit running behind. We've got the Conference Board consumer confidence number out, 94.6, so slightly down, although there was an upward revision. It's again one of those up and down ones. The prior number was 94.2. That got revised up to 95.6, so that's why it looks like a down number. Still beat expectations. Current conditions improved to 129.3. Expectations improved. Expectations dipped from 73.4 to 71.5. 1 year inflation expectations went up a pip to 5.9 from 5.8 previously. Long story short, nothing of note in those numbers to say the economy is doing anything bad. ADP, they've decided to drop some jobs numbers on us yesterday. They're going to be producing a weekly report now every Tuesday on jobs. It'll be running for the prior 4 weeks. So this report they dropped showed a gain, an average increase of 14,250 jobs. That was in the 4 weeks to week ending October the 11th. Next week, anyway, we get the main monthly ADP number, which is going to get a lot of focus because we're not going to get any NFP data on the Friday. So we're going to be looking at that. On the jobs front, UPS is apparently going to cut 48,000 jobs in management and operations, a bit similar to what we heard from Amazon. Looks like the managerial sector has taken a bit of a beating. Again, this is something that may pop up in next week's Challenger layoffs report. It's a bit of a chunky number, though, 48,000. The RBNZ, they're doing some job cutting, or have been doing some job cutting as well. They cut 134 jobs because they're doing a bit of restructuring over there. Not a big amount, but lot to mention when we keep hearing job cuts everywhere. Trump has got a bit of bad news because the judge has extended the block on Trump firing all those government workers during the government shutdown. So that's all still up in the air. While we're talking about trade deals and stuff and soybeans, Japan has apparently committed to 8 billion worth of purchases in soybeans and other goods, according to US Agricultural Secretary Rollins. Again, Trump, he's had some bad news as well. The Senate passed a bill to terminate his tariffs against Brazil. Now, some of these people, a lot of these people who voted for this were his own Republicans. So maybe facing a bit of a bum fight when he gets home from his whistle-stop tour of Asia. Trump also clarified things about Besant after we had those press reports that Besant was in line again or favoured by Trump. He says he's thinking of Besant for Fed, but Besant doesn't want it. So hopefully that's put that one to bed for a while anyway. That's it on the news. Anything else you got to discuss, Kate?
Yeah, some upcoming stuff, but if something that's gone completely under the radar, including for myself. I actually forgot about it when before I read about it in the news this morning, is that we do have a Dutch parliamentary election ongoing today. Seems that the far right is losing a bit of their voters, or in the polls at least. So I'm not sure if that's going to impact much on the euro, but just want to keep half an eye on, I guess. That is ongoing. We know that in the lowlands, Belgium, Holland, or the Netherlands, I should say, they do have the habit of having a lot of difficulties to find governments. So maybe keeping half an eye on, just in case it would have some sort of an impact, depending on how that vote turns out.
Yeah, thank you very much, mate. Right, so let's have a look at what's coming up today. As mentioned, we've got the Bank of Canada is going to be the main news, at least in the early part of the day. 25 pip cut expected. It is a monetary policy report meeting, so we get updated forecasts. I'm going to see if they've shifted from this scenario-based forecasting that they've been doing, i.e., if things go really shit with tariffs, they've got one forecast. If things aren't so shit, they've got another forecast. So I don't know if they're going to stick to that. Maybe they will after the latest bum fight between Trump and Carney. So yeah, 25 pip cut expected. There's probably a higher risk of this out of all the central banks this week, that they put a surprise and maybe keep rates unchanged. It's not a big risk, I don't think, but it's probably, as I say, bigger than some of the other central banks. But on top of that, it's probably going to be the message that comes with it. Is this going to be a cut and then they're going to pause, or are they going to keep more on the table if the economy continues to look a bit weary, shall we say? So listen, I won't be around for this one, thankfully, because I can't stand listening to Stiff and Rogers. I'm sure all the guys will be. Any last minute thoughts on this one, Kay?
Surprisingly, quite a bit has been priced out of the expectation. There's been some banks all of a sudden revising their outlook and saying that the Bank of Canada may actually pause this month. And that I think is what we find back in those in those moves that we see in the Canadian dollar the past 24, 38, 48 hours. Um, Yeah, I don't exactly know why they would be pricing out rate cuts. Haven't well, the numbers have been up and down, but yeah, they had a bit of a stickier inflation, if I'm correct. But apart from that, I don't see too much of a reason why they would have been pricing out most of the rate cuts, and in such a short period. So yeah, that's a bit of a surprise. I would still go with a 25 in pulse.
Yeah,
That's where I'm still at. And then we will see.
yeah. I'm not sure. I was just checking our central bank thing. I'm not sure this is right. It's got a 90% chance of staying on hold, which
Yeah,
is
I
a
don't
big.
know, but there has been some repricing. Not sure about. Okay, I'm not sure about that one.
Yeah,
But I did see that some pricing out has had been done. I wasn't aware. I wasn't aware that it was that violent, which seems a little odd to me as well. Let me just look at. No, Canadian yields have barely moved, the 10-year at least. Not sure about the shorter end. While you're talking, I'm just looking at it, what the short-term yields did. No, we haven't. We no, we it's over this week we have moved barely 2, 3 BPs. So I don't no, I don't get it either. But I did read that somewhere like pricing out and saying that they wouldn't do anything. But anyway, I mean, we will see soon enough.
yeah, yeah. I'll double check those numbers there. I'll hand you the indicator. But yeah, we're going to see soon enough, as you say. We're not going to get new home sales data, and just so you know, you can use this calendar because it tells you who is releasing the data. So, new home sales is the Census Bureau, which is a government body. We will be getting pending home sales because that's released by the NAR, the National Association of Realtors. So that's a private firm or more private, not a government entity. So you can see some of this data, who's going to be releasing it, just to see whether it's coming or not. So we won't be getting new home sales, but we will be getting pending home sales. Anyway, it's Fed as well later on. They're expected to cut rates to 4%. This is probably just going to be a bit of a placeholder meeting. There's no real need for Powell to ruffle any feathers. But, you never know. I think the things that are going to be important is maybe Powell dropping the hint on what data points they're watching during the shutdown. He likes to drop the odd name on that front as far as what's going on. There's obviously conversations going on about what they'll do with QT. Are they going to announce the end of it? Whatever. This is one of those moments where it doesn't really matter. We all know it's coming. The market knows it's coming. Whether it's this meeting, next meeting, the meeting after, is no real big deal. It is coming. So there's been, apart from a little maybe knee jerk on a confirmation move, that should flow under the bridge pretty much without a fuss. I don't see any which way that we might get a shock from this one, unless Powell mentions that the shutdown is causing them a bit of a problem assessing the economy, which might get the market a little bit wobbly, thinking that they might have to go on hold until they get some new data and whatnot. But yeah, apart from that, I don't think it's going to do much. Kay, your thoughts? Anything from Mr. Powell?
Yeah, agreed. Unless he goes, we need to stand ready to intervene in the repo market because there we see some lending stress starting to pop up. It's been reported by a lot of fin tweeters, but $8 billion is not yet alarming, but it's it is a bit of a move. So the thing is. He may not be able to surprise hawkishly, unless he unless he says, yeah, December we are not going to cut, but he's probably going to leave the door open either side for those. They never, or at least not him. He never really said the next meeting is another 25. If he would say that, then that's actually another dovish surprise. So I'm kind of struggling today. See what he can do to come over hawkish. So I'm siding with the camp of neutral to perhaps a little dovish surprise in there. But it's a fine balance, right? It's probably going to be 25 and then 50-50 standing ready, but we don't know, like he usually does, walking all sides of the lines. But yeah, it's just maybe a 55-45 that he may come over a little dovish.
Yep, that sounds quite fair. You expect any big price moves? I mean, probably the only place you want to be looking is on yields. See what they
Yields,
do.
yeah, yields is one thing. We are sitting on that 4% line. We're sitting on the 3.5 on the 2 years, which is the which is two cuts basically. Yeah, in theory, they shouldn't move much unless he goes more dovish, and then we could see a move down to, I don't know, 3.25 or so on the twos, and which is already a big move in the short term. But yeah, maybe 3.30, 3.25, and then that famous 4.75, 4.80, 3.75, 3.80 on the tens. But therefore, he should be already relatively dovish, right? To add another 25 BPs to the bearish yield picture. Yeah, I still like, as I said, like uh, I still think that it should not be we should not see any shocks on there. But anything dovish, I think, in turn may weigh on the dollar.
Yeah, that could be the case indeed. Well, I don't know if the dollar's going to go anywhere fast, but yeah, I mean, I suppose if we're looking at any sort of dollar weakness, if it is dovish, is that going to be a bit of a dip buy or rally sell in pairs like cable? Because you take cable at the moment, and
Yeah.
it's right under the cosh. So maybe this is an opportunity to use the
Mm,
Fed if it pushes some of these trends or moves
mm.
the opposite way.
Yeah, cable is for sure one I would not buy right now. But if he is a little dovish, I'm thinking about more stuff like maybe euro dollar straight and Aussie dollar who could break higher. Those are the two really that I'm particularly keeping an eye on. Yen is going to be a bit of a flip the coin. I mean, it's probably, if he's dovish, it's probably going to dip down. But then if he's relatively dovish, stocks, etc., should absolutely go on a flyer again and end up in risk. And maybe the dollar yen is not the one to be short of. Maybe if the market, let's say, misreads or misunderstands or goes too dovish on the dollar in a way, yeah, so maybe dollar yen and cable are the two that we'd be looking at fading on a move, and then on the other side of the spectrum, euro dollar and Aussie dollar, and I don't know what's going to happen on the Bank of Canada, so I'm going to leave the dollar CAD alone once more, and I really don't know.
Yeah, I'm in that mood at the moment with dollar yen. Been happy to trade it recently because it's been pretty decent. But right here and now, Fed, Bank of Japan, meetings in China, meetings with Trump and Xi and everything. Yeah, I'm in no man's land with this one at the moment. But dollar CAD is one I'm looking at potentially for a Bank of Canada trade, though typically it's moved pretty closer to the levels that I would consider a stretch point if they pull us a surprise and keep rates on hold. Then this one is probably at risk of seeing some decent downside. I'm putting a little flag in my 38.66 area. It's the 61.8. It's an old big level that we struggled to get above previously. It's a bit messy. Let's see if it's on that one. There we go. That might be a bit clearer. You can see we had all this stuff going back a couple of years, so it's a significant level. And if it's a reasonable stretch point, probably not now because we're only sort of 80 pips away, odd. So 70, 80 pips away. So it's well within the frame. It could mean if they go on hold, or if they hold rates, I would be expecting a minimum probably about 100 pips in this one. So it might bust through that level entirely. But if it doesn't hold, it gets back above it, then I might have a little think about that. I'm still long. Fortunately, I've done most of my upside stuff, so I'm long from mainly lower down where I took the trades in the first place. So I've got a bit of margin to go in that, so I'm not too fussed about it. But yeah, I'm going to be watching this one pretty carefully for what they do with that, as I say, big level down there. Euro sterling, that's Ali, you're lamenting missing the long. This is what happens in this pair. It does absolutely nothing for months and months and months. Tight ranges, up and down, no direction, and then wallop. It decides to make a move, and you better not stand in its way. We're now up into 88. We broke through the top of the zone, didn't hold for much as resistance, but it's offering a bit of support. And now we're looking at some of the bigger, longer term levels, and this is the pain with this pair, is that you've got to come zooming right out to see where some of the old historical stuff is. We're going back to 2022, 2023 here. So 88, 25, 30, bit of a traffic zone. Not overly clear, but you need to zoom into some of these areas to see the price action more closely. So that's the next level, 88, 60, 70s, bit of a zone, just some of these highs and lows that we got up here. And then we're getting up towards 89s.
We've got the 78.6 right here.
Is what?
We've got the 78.6 right here at 15.
Oh, have you taken it off of here?
Yeah.
Not the big one.
No, not the Truss quartile thing. If you take the next one, 78.6 comes in right around 88, 16, 17 or so.
Yeah, so that's something to keep an eye on as well. There's lots of traffic up here. I mean, where's the limit for this one? I mean, we're all, we're all waiting for this budget to happen. Would that be potentially the last hurrah, as I'll be mentioning? Will it be, sell the rumour by the fact once we get there, or is it going to keep going?
Could be. Anyway, my medium-term plan is to if they take it up there where your thing is, if they take it up there, I'm going to be a happy take profit seller for the rest that I've got on, because it could be the case of Muller the sterling before the budget, and then go like a big wave of profit taking. So just I actually hope they take it up there before the budget. That'll make things so much easier, and then after the budget we will see.
Yeah, because that's what's been behind this plan for the last few months that we've been trading this. I've been trading it, certainly, is get some pound weakness and then see what happens in the eurozone. I still think they may be forced to cut rates, but if the economy is turning a bit of a corner, then once we get through all the UK noise and news, if the euro's not doing too bad, if Europe's not doing too bad, that could be a secondary wind for this pair. So we'll switch between trading the quid side of things to trading the euro side of things. So this could still continue high. I wouldn't call it a dead end once we get to the UK budget stuff, because there's always two sides to a pair. But yeah, if Europe doesn't progress, if we don't see growth coming through, if all this German spending doesn't come to fruition, I think Europe's going to be in for some more rate cuts, which means this pair might then flip around. But lots and lots of months to get through before we need to make a judgment on that. So we'll just take one thing at a time. Euro Swiss, Ali, well, I'll look at that for you. This was looking a bit wonky yesterday. We had been dribbling lower, and now all of a sudden we're back up here. Any news behind this one, Kay? Is this a risk move? It
really felt like a fixing move yesterday when it came down. There is a bit of resistance around here, but uh, I fail to see why all of a sudden it rallied back up. Is this because that confidence number there, zoo expectations remain negative in Switzerland? Possible. I can't see it linked to any of the gold moves or so. I haven't seen anything, any how shall I say, SMB comments or whatever. But yeah, I think yesterday the move lower looks to have been fixing, but then the bounce, no idea. Honestly, no idea.
Yeah, I've no idea either. Not that I'm going to complain about it. Still a bit long. I'm going to see if I can keep my streak of lucky sevens going and lop a bit off at 77 if we get up there. But yeah, it's still creeping. I mean, we're talking what 60 pips in well just over a week. So it's not exactly going rockets, but I'm not going to complain while it's going this way until we get up. Oh, that's too long. Let's go into there until we get up to test the underside of this zone. That's going to be another big test for that. We do have a couple of little pickle belows, but if we get up to this level, this has been the wider consolidation zone that we've been in for quite some time. So I'm going to see if we get back into there. Anyway, right, let me pass it over to you, Kate.
Yeah, thank you. Right, gold. Oh, that saw a bit of a reversal here. I need to tip my hat to Mr. Ben in our room, Benedict, for showing us all this trend line coming from 2023 in gold, and we held just above. So this is an additional thing that we can maybe bank on or lean on to see where this correction, if we see more downside, may hold or indeed collapse further if we get down there. But anyway, yesterday I was talking about this 38.90, 38.5 zone being a support even without this trend line. It was looking really, really bad at one stage, but we had this bounce. This is clearly the market gradually pricing out positives or positive expectations surrounding that Xi Trump meeting, and that's I think going to be our next big mover. Market maybe already, as I said yesterday, maybe the short termers are already short, trying to push it down, but that's where we saw obviously, I should say, this big bounce. But this is the reluctance, I guess, of more medium termers also to see too much of the positives in that G Trump meeting, which is going to be, as I said, the next big mover. I think. Okay, so if you're looking for levels, I would again keep this a very close eye on what's happening between 39 and 38 three quarters, but I would also look at this halfway line here, 38 and a half. So you have a $50 range here to monitor to the downside. 39 three quarters, 39.45 completely being watered down, and those may show up like as little intermediate levels if something positive comes out of that meeting tomorrow. But I would really be very careful if we start to break back above 41.10, 41.30, okay? Because that could be if once the meeting is done between Trump and Xi, and if really, I'm just going to repeat, if really it stays at TikTok and soybeans versus tariffs, the market is going to be disappointed, okay? If there's no deal also on rare earth, which I would assume is the biggest thing right now. If there's no kind of framework or a deal on rare earths, this thing could actually absolutely take off again and go back to the all-time highs. Why not? So therefore, I would really closely watch what's happening around 41.10.30. Nothing closer because it's been moving $100 at a time. So I mean, it's yeah, there could be something around 40, 60, maybe a bit of an intermediate station here on the moves. Maybe actually it's enough if we get up there pre-meeting. But really, you need to look at a bit wider levels here, and it is probably going to move pretty violently once we get out of that meeting tomorrow. Silver. It's been a bit surprising as well. Well, I expected a bit of a slowdown or a bounce from this 45.5, 46 zone, which exactly it did. But then I didn't see really the need or the or the incentive also to take it back up above 47.5, 47.70. But again, I think it's already short terms as well, trying to push this lower and getting it around there later, Hosen. Um, and we are sitting here. Obviously, we have to look at the same kind of with even wider if you look at it in percentage wise. But the silver market is so much smaller than gold, so we need to look at it from a wider angle. It is clearly again the 50 line, 49.80 to 50 15 50 30. Okay, it's not 50 dollars, but it's the psychological level without a doubt. If you get back above there, it's the bull bear line now for this silver in the next 24 hours, I guess. Not sure that FOMC will come into play. Maybe if Powell is a bit more, I would say this in this case a bit more dovish than maybe expected. It would already fly up there at least into the G Trump meeting, but especially look at it afterwards. So we've got the 50 give and take 15 cents line, and we got the 45.5, 46. That is clearly those two edges that we need to watch now coming out of that G Trump meeting and whatever result or no result there may be. As I say yesterday, cable looking dangerous. Well, it did. It broke below that 132.90.95. It went below the 132.70 and the prior 132.5, and now we are hanging around here. The next little level, 32.0510, roughly held this morning. We had a quick look at 132, the figure. We're bouncing just slightly now. Euro sterling also finding a little bit of a top there, 14 high. So yeah, it's probably going to range trade a bit until the FOMC, but if you look at this globally, sterling is not looking particularly well, right? So we're going to have to break back above 132.70, 132.95 to then only come back into that zone, 133.60, 570. And I agree with Ryan. This is probably one of those where if the FOMC Powell comes out and Co comes out a little bit on the dovish side, we could see a bit of a move here, even a bit of a stop loss run, but maybe around 132.90, 133 the figure. If we would get a bit of a blip, we may find sellers. In any case, the bigger zone now, which has held twice here as well, is going to be up at 133.65, 133.80 or so. For as long as that caps, the picture here won't change materially. And there is a risk that we are going to revisit that 131.40. It's even showed up here as well. But mainly here, it is confluence 131.40, double bottom, 38.2 of the whole 2025 move. It is going to be mega important if that 131.40.45 gets retested. Okay, so if ever we get down there, be very careful what's happening with the cable, because any move down is probably going to trigger more maybe trend following sellers and yeah, push it lower down. Very important level on any close of day, this 131.40.45. All right. What else? Swiss. Yeah, the Swiss, Liz. We've been talking about that Swiss a little bit a few minutes ago. Okay, overall, there's still this mega level, right? That Ryan greatly picked up on the Euro Swiss, but Yeah, we were about a bit wondering what's going on here in the Euro Swiss today. As we were talking, if you look at the title, and for once in my lifetime, I'm going to go on a 15 minutes. If you look at this move, this is the London fixing. This was the London fixing move that we had yesterday, and then we had a little bit of a push lower, but it did find really good. I'm really, I don't know if they took it as an excuse, that zoo expectation thing to ramp it higher, or has there been something announced that we missed in the meantime? It is possible, but it does seem that we find now finally that we find buyers every time we get anywhere close to that number. If you think, or if you bank on this level, buying around 90, 92.40 is still a relatively small risk if you put your stop below 92. So maybe just deep buyers in that stuff coming in, okay. But as Ryan said, there are levels on the top which should show up at any point. We are not yet nowhere near a reversal in this, and then the dollar Swiss is just a factor of the combination of euro dollar and euro Swiss. Yes, it bounces just the same as we've seen in the euro Swiss. But again here, 79, 80, 90, 80, the figure is obviously going to be a level that we need to look at as well. Okay. Oh, by the way, look at where the S&P is pulling up. It's slowly nearing that 1618, 69 and a half, 69.55. For those who watch stock markets, that's probably one that's going to be on the move after the FOMC as well, depending on which side Powell leans. I suspect, though, that any move back down here into the 68s are going to find buyers again. And that is roughly it for me for today. Yeah, we showed the Aussie around 66 and a quarter mega level. And yeah, Ryan, back over to you, mate.
Yeah, thank you very much, mate. And you did remind me that we do have the Yanks coming in for a couple of days until their clocks change. I did have something special for them just to welcome them to the Flow Show. Your typical American images there. So that's to welcome all our Yank people in for a couple of days. Anyway, that's it from me. I'm going to be off for the rest of the week, though. Everything going on, I'm going to be sticking my nose in the door now and again, seeing what's going on. Otherwise, I'll leave you in Kay's most capable hands. Have a great rest of your week. If I don't speak to you, have a great weekend, and I will see you next week. But everyone else will see you on the Flow Show tomorrow. Have a good one, everybody.